Hi, everybody. This is Harry Boxer from the Technical Trader, otherwise known as the TechTrader.com, service that's been around since 2001 and considered one of the first trading rooms on the internet ever. I've been doing this a lot longer than I'd like to admit, more than 5 decades. But I think I've got it right. I've been doing day and swing trading for the last 30, 40 years. I used to do daily chart tradings, but I learned after 2001 when the market crashed in 2000 that we're probably better off looking at intraday patterns and trading those. So I trade 1 minute day trade patterns intraday because I find that all patterns repeat in all time frames. When your head and shoulders, your flags, your anything that you have in terms of a pattern, and I'm a big pattern recognition guy. I believe that patterns form in all time frames. As I said, it's a question of price and volume, the combination of factors that I've learned over the years. In my room, we're strictly day and swing traders. I issue 3 to 5 swings a week usually, but in the morning when I come in and I prepare my focus list for everybody, and sometimes you'll see 15 to 20 stocks on that list, and then I'll pick out half a dozen to as many as 8 or 10. We had a lot today. Today was a very, very big day of potential swings. So we update trades, we put those on. What I want to teach everybody today or talk about is my number one pattern that I look for every day. I think it's important to come in prepared, but also with knowledge. They say that 2 months in my room is like 2 years in the classroom. That's because I'm constantly pounding into everybody's head via videos, which I do all day, pre-market and post-opening, and several times a day. I will update you. I'll show you the charts. I'll show you the patterns and the trends as they're developing. I will always be raising my targets or lowering them or putting stops in or exiting positions and giving you alerts on all of those. So if you want to stop chasing stocks and access the ultimate technical stock market analysis service for day and swing traders, come to the TechTrader.com, click on join for free, and you can get 2 weeks or 10-day free trial and no credit card necessary. Come in and join me for a couple weeks, see what we do. It's a very, very friendly room. It's a very smart, experienced traders. I have people with me, some of them 15, 20 years, still trading with me. It's a great place to learn, a good place to make money. And that's my little spiel about the TechTrader.com. I wrote a book called Profitable Day and Swing Trading, which is currently out of print. I'm going to be reprinting it and getting it done shortly so you guys can take advantage of a book that I think is written in layman's terms and easy to understand and is a definite guide to learning technical analysis. But what I want to show you today is the patterns that develop and what I use. And let's go to, I want to reshare my screen. Hang on a sec. You should see my charts now. Now, these are trades from today and things that we put on. And I noticed this morning the kind of patterns that I like. Now, I've been following this stock, Iovance, for a long time. For example, this is once a huge, well, let's see. If we go back even further, yeah, Iovance once traded in the 150 range back in 2011. It then got creamed in 2013 from the base, broke out again. And the long-term base, as you can see, back in 2001, it once again reached in the mid-50s. After a long downtrend, it reversed right there. We traded it nicely there when it broke out of the downtrend and started to trend, and also when it broke out of the wedge. I'm a big believer in pattern recognition, as I said earlier, and we want to see continuation patterns. So what I look for every morning and what I look for even on my swing patterns is when I'm seeing something that's trending. For example, if we go back in time here, I'll show you Iovance back in here. Now, all the way back here, when it first broke the declining tops line with a breakaway gap on volume, is when I put out a swing for my people in the $5 range. Notice what this did after. It went quickly to 8.5, then it pulled back twice to about the 7 range, and it's exploded to 10. Now, my target on this, because of this prior high here, was around the $9 range. So a lot of us got out here. It went a little higher, but here's what happened after that. It exploded. Now, what most of us did here was after we saw the coil on low volume and then a breakout here, I put a new swing on it around 8.75, and within 3 weeks, it was trading at 17. It doubled. Longer term, take a look. Now, again, I believe that longer term patterns affect short term trading. of course, with a support, resistance, and targets and stops. So you can see that. Obviously, if anybody in this stock that saw that go under six and change, 6 3/4, were stopped. If you're a trader that's disciplined and you know where the support and resistance lie, that's where you should have got out that day right there when it broke down on 18 million shares. So I've been watching this stock for a long time. From six and change, check where this went to. That's right, 270. Incredible, right? That's what stocks do these days. Anything biotech is always subject to explosive moves both ways. So in the case of Iovance, this is what we did in the last couple of days. It broke out here. I put a swing on it. It immediately went from 2 3/4 to 433. Today, we already had a swing on it. I entered it as a day trade. Why? Because it popped up yesterday and coiled. This morning we came in, it had popped again and formed a little pennant right there. When it broke out of the pennant, I put a day trade on at 340. Within minutes, pre-market, it went to 377.80 and backed off. But back off was a perfect three-wave corrective falling flag. Broke out of the flag and formed another little bull pennant right here. And I told my people, if this gets out of that pennant, we want to go long. Well, it exploded. If you were still long, if you were long, I should say, then you were wanting to re-enter when it broke 375. Well, within a cut by 4 minutes, it went vertical to 415. And then it pulled back down sharply. It technically broke support right there, but it recovered and it had stair-stepped its way higher. Now, what I always do is look at lows and draw your trend lines. Notice the 1, 2, 3, 4, 5 wave move. And when I see a move out of a consolidation that has 1, 2, 3, 4, 5 waves, I exit their wave. So we had our traders out at about 4 1/4. It pulled back down. And you can see by the end of the day, it hasn't done much. But I will say this. Any stock that intraday has this kind of a pattern with 109 million shares, I kid you not, when you see that kind of volume trade and you see a stock that is in a rising channel, now it did go laterally here, but it has not broken support, which for me would be around 388.89. My target on this one's 450 and 498 to 5. Let's call it 450 and 5. If it's going to extend this channel, you might even get to 5 1/4. Something to watch for tomorrow. But that's how we find our day and swing trades, looking at the intermediate and longer term patterns as well as the short term patterns. Now, everyone, I once talked to Ralph Acampora. A lot of people may know him. He was one of the elves on Winning on Wall Street many years ago at a conference. And I told him I trade 1 minute charts. He says it's impossible. I showed him and he couldn't believe it. So that's, that's something I highly recommend. If you're a day trader, you must trade 1 and 5 minute charts. Now, 5 minutes gives you a different perspective. If you look at 5 minutes, 1 second, it's 5 days. A 5 minute chart gives you a little bit longer perspective. It goes back 3 weeks or so. But more importantly, you can see the trend a little bit more distinctly. What I would do here then is change that to that being the bottom. And I'm still looking for 5 1/4 on the stock on an extension with momentum. Now, is the stock ahead of itself? Yeah, but at the same time, the volume that came in today, it usually comes to a head and it usually spills over. So I'm still looking for a 4.5, 5 at momentum tomorrow. But you never know. When you're involved with a stock that's running with momentum, has already broken out, reversed the big downtrend, formed the base, the moving averages cross over right here. That's the key. When they cross over and the stock consolidates around there, that's a really good buy usually. Above 250 on this stock was a screaming buy. And sure enough, it went to 433 in a couple of days. Now, it doesn't mean it can't go further, but I would like to see a setup where it consolidates or flags or wedges in this zone since it just broke through resistance. Now, there's a gap here. Gaps are resistance. This one's at 457. So rather than saying we're going to 5 or 6, let's look for a follow through tomorrow to about 450 and then exit the trade. That's the kind of stock trading we do at TradeOutLoud.com. I want to show you an example of something today that went ballistic. How about this stock? Now, I want to show you before today why I was so high on it. Check this out. Folks, this is an inverse head and shoulder pattern with multiple left shoulders and right shoulders. If you want to call it a rounding bottom, you could do that, but it's hit the V bottom head in April. Reversal day and then retest. showed me that if it gets through this line, about 9, it's a good swing trade to at least 11 and maybe 15. I, of course, didn't know that they were going to have a major FDA approval on a drug that exploded the stock. Literally, folks, 612% today on 36 million shares, which is unheard of for the stock. So what did I do with this? Here's what I did with it. When the stock opened this morning, pre-market, I want to show you what it did pre-market. It was coiling, consolidating. See it in here? Not until it popped with volume did I say this could extend, and it's going to. I had targets of 65 and 70. It reached 73 today. So we went in long when it broke through, I think it was 58. Hang on a minute. Yeah, I wanted to see it above here. So it was 57. Now when stock, when you see that kind of momentum intraday, and then it's coiling, consolidating, at this point in time, I said we're waiting to see if it breaks across that coil, which it did there. Not only did it break out, but check this out. It formed an ascending bull coil here and popped through here. This is where we went long, around 57.5. And here's what it did the rest of the day. It spiked to 62. It spiked to 66. It spiked to 69. Came back down, held support, and formed the coil. Held the VWAP, volume weighted average price, a little bit below the trend line, but it's still, for me, as long as if the trend line breaks and the stock goes sideways through a trend line, it isn't the worst thing. But we want to see it not break down to below that pullback support area, which is basically in here. So a move below 63 was called a stop for my people. The stock still retained momentum. It was coiling. At the end of the day, it started to run. It broke out about right in here. See that one bar? Broke through 66. Some of us went long. I told them 70 max. I don't think it goes higher than that. It did. Most of us took like a 5-point trade, and it took a hard dip after hours only to fly to 73. And it's forming a flag in here. I don't think this is done. It's obviously way extended, having gone from 9.5 to 73 in a day. Obviously, some big drug news. But it's another example of how we follow the patterns, the chart, the trend lines, and I am constantly, literally every 45 minutes, maybe less, sometimes twice in a half an hour. If I see something that needs to be talked about and I want to show it to you, I will come back on. Now, in the morning, pre-market at around 5:15 Eastern, 10 after 5 Eastern, I put up a webinar for all my people so you can see my charts, and I do a live pre-market talk where I'm on for about an hour on and off. I do updates pre-market. I show you patterns as they're developing in the pre-market. A lot of our trades are done before the market even opens. Some people trade only pre-market in my room and then go play golf or whatever. But the bottom line is you're looking at patterns and setups for further profits, of course. Here's an interesting chart, something that went ballistic vertically. And I want to show this to you again. Go back in time so you'll see what we were seeing then. Right there, when it broke out, I said, if this thing gets above 7, I want you to go long. Buying picked up. It looked real good even before 7. This is in pre-market. It then spiked to 9.5 quickly for 2.5-point trade in pre-market. Then set up a little consolidation. What did it do then? Pull back down a little bit, but exploded again. And then popped and formed another wedge. Now, I'm a big Elliott wave believer. Elliott waves moves in 1, 2, 3, 4, 5 waves. So I exited most of our stock around 11. And not bad considering we got in around 7. That's pre-market. The market's not even open yet, not even close. And this formed, and I said, you guys are up for it. It has 5 waves. The 5th wave consolidation is always less reliable, but it might be another move back towards 11. I think some of our guys did go back in. I told them all, make sure you're stopped under 7.5 area. It did accelerate a little bit. It reached back to 1061, but then backed off again. See the volume pullback? When you want a stock to consolidate and flag or coil or create a continuation pattern, you want it to do it with a low volume ebb type of pullback, which indicates a lessening of selling intensity and maybe a setup for more upside. Let's see what it did. Sometimes this pattern is less reliable because it's had so many waves up. After a while, too many people have profits and are inviting sellers. Well, here's what happened. Drift lower. It's on the VWAP. It hasn't broken yet, technically. There it is. That's the breakdown under 9, I recall. Now we put a $9 stop on it. You just got to be disciplined in trading. You cannot just hope a stock comes back. Here's what happened. Slam dunk down to 6. That's why when I have stops at 9 and you watch a stock in less than an hour go to 6, you're sitting there, very unhappy. And I also told my people, that's a bear flag. I don't know if it goes lower, but let's see what it did the rest of the day. Coil, 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 coil. That is a bear coil. Now, I don't know if it's going to go down, because the longer the coil, when this happens, sometimes it's a mini base and it'll break back out again, but maybe not. I tell everybody not to do anything or take any action until it either breaks up or down. Slip lower, all the way down to less than $5. So this is a perfect example of following disciplined trading, following the patterns. This is a wedge, a lot more of a lateral wedge. This is more of a descending wedge. There's another wedge. See what I mean? If you follow these patterns, you can take advantage of the breakouts. UAVS, one of our day trades from today. When did I trade it? Well, I came in watching this day and a half long going nowhere, and then suddenly this occurred. Pop and wedge. So I said, look, this is a low price, cheapy stock. But I wanted people, a lot of my traders like participating in low price stocks because when they move, they can move 50 to 100% like that. It's quick money, but it also could be quick losses. What do we do here? I implored everybody to stop under 230. Here's the pop. Now, sometimes a wedge or a coil will get a breakout for 1 minute and then a return to the apex. If they can hold that, it's still good to go. It's a little scary, but that's the discipline. See that? Spike up again, but coming right down again. So this stock's acting extremely vulnerable in here. But the trend is your friend, right? We are going up 260 from 236. Now, not a big trade, but so far you're making money and you're a scalp trader on this one. Boom, 275, 284, 295. Now, when it reached the channel top, which I had drawn parallel and said if it reaches anywhere near 293, we're exiting. So everyone exited up here. The stock came down, formed a flag. Let's see what it did the rest of the day. Pretty much broke down. But look at what it did late in the day and after hours. Right back up to 328. We got in here, folks, at 243. A nice trade. And here's one that didn't really work great, but it did give us a quick scalp. It exploded. I mean, went vertical. I don't like chasing them in the morning when they do that. This was before the market opened. It did spike, falling wedge, and then broke out here. That was a day trade for some of us at around $1.80. Now, I don't usually like stocks under 2. So I told everybody it's not a recommendation per se, it's a guidance. The guidance was to buy it here with a target of 248 to 50. It spiked to 260. Came down, went nowhere the rest of the day. But nevertheless, we were able to get a scalp on it if you're quick and nimble. CYCC, another example. Pre-market went nowhere, and suddenly, after the market opened, it spiked and formed this wedge. Now, you don't always have to trade pre-market or even at the opening. Best trades sometimes are after the market opens and the stock starts establishing a trend. Here it popped, pulled back, and popped, and backed off, formed what we call a coil, and broke out. So the breakout occurred at 12:30. It quickly popped to 13:10, backed off, and formed a perfect little flag. Take a look at this. It's actually not a flag. It's called a pennant because it's got that kind of a pattern. But take a look once it broke out of the pennant at about 13 and a quarter. Boom, 1548. We made nice money on this one today. The rest of the day went nowhere. Now, the number one question I get all the time is, how do you know when to sell? Well, if I give you targets, which I did, I believe on this stock was 13 and a quarter and 13 3/4. And then I rolled it up to 14 and 3/4 and went all the way up to 1548 when I moved. Here's a stock that at 9:30 was trading at 1083 and went up nearly 50% in the first couple hours. What did it do since then? After pulling down sharply, it held right there on the volume weighted average price, or VWAP. And for the rest of the day, it did this from the flag, consolidating the big move. I would watch this for tomorrow. It may be an extension type target, but you want to also look at the daily chart. Look how ugly this is. Now, this is one of those big reverse split stocks. It was never trading at 30,000, I assure you. So you can see the spike and the wedge. Anytime you see a low price stock with a reversal, and usually because of the reverse split, it'll go down sharply in terms of the outstanding shares. So it makes it a lot thinner and more manipulative. In a stock like that, you don't want to stick around. You want to hit and run trading. So for me, pop, pullback, I'm trying to pop again. If you ever see the stock run above, I'd say 18, you might see quick, low 20s, mid 20s, high 20s, something like that. But first, I want to see it come out of here. In any case, it was a nice little pop coil and a day trade and a nice one. Well, here's a monster move today. HIMZ, which is the ETF for HIMS, here's the parent company. I want to point out in the morning what this did. Again, it's a pop and an ascending bull coil. That's where we went long, around 51.90. Check out what it did. 53 3/4. That was my first target. My second target was 56, I believe. After consolidating, it hit 54 and it flagged again. But it's, I learned one thing also. When a stock has no volume and suddenly has a cluster of volume, it usually means there's big interest. What's called a price volume surge or a cluster of volume. Early in the trend will usually dictate that it might be a rising channel. And you get one of these 45-degree angle rising channels, you can just sit there and go cha-ching, cha-ching, folks. I'm making money. Look at this. It just tagged 55.98 and a 56 target. And later made it 58. At 2 p.m. it hit 59.16. I raised my target to 62. I don't think we got there, but it did do this. Consolidate and coil. So in essence, this is a long 1, 2, 3, 4. If you're looking at Elliott waves, and we always look for 5 waves, possibly tomorrow we'll get a wave up to spike into the low 60s. But I don't trade this. I trade the ETF, HIMZ, which is cheaper and give you twice the leverage. In the morning, it popped and coiled or flagged, and this is where we went long. When it broke out of there, right there, 22.5. Quickly went to 23 3/4, 25, 27, and then went sideways the rest of the day. At the end of the day, surged again, got up to 28 and change. But look, when you're in a stock that trends, the way to stay in the trend is keep raising your stop to the prior low. Below here, below there, below there. Notice it didn't get below that, and it kept going. That's how you stay in a stock. Make sure you're raising your stops. You have to do maintenance on your trade. You have to keep an eye on it nonstop. You got to be serious. You can't just let it roll. LBRT, another example. We did not trade this one, but I gave out a guidance on it. When I saw it pop and pull back and form that coil, I said, if it pops through 12 and a quarter, 12.30, it might be a little bit of a trade. It went up to 13.87 from 12.30. That's $1.50. And folks, it took about 90 minutes. Rest of the day, I spent coiling and consolidating and may have some more going for it. Up next is AVXL. Now, this one didn't give me much of a setup. It just kept going. So what I waited for is for the setup. There's where I noticed a coil forming. And I said, if we break out of the coil, let's see if we can get an extension trade. 12 and a quarter in an hour and a half, 13.72. It's $1.50 right there in less than 2 hours. My targets on this one were based on angles of ascent. And when you look back at prior highs, check this out. Never quite got there, may get there tomorrow, and it's flagging, bullish chart. But even on this one, you don't have to necessarily be there in the morning. You could be midday, watch the stock flag and extend. Same thing happened here with KOD, which I did not put a trade on, but I gave guidance on. I told everybody, look, it's thin. If it shows me what I want, I may put a buy on it. First, it formed a little pennant, and then it formed an ascending bull mini coil. And why is it ascending? The bottoms are ascending while the tops are flat. Look at the volume in the breakout right there. The bottom of that bar is 603. I think about 605.10 is where I gave it a buy. And by the end of the day, 691. So a nice 80 cents or 15% trade on KOD today. TKNO, really nothing to do here. If you look at the chart, it really had what I consider an ascending bull wedge. Very powerful. And when it broke out of it, it went vertical, flagged for a bit, and popped again. In essence, a 1, 2, 3, 4, 5-way move early on. Rest of the day, it's been going nowhere. LW. Check it out. Once again, folks, we're going to go back to the beginning of the day, and we're going to look at my favorite pattern. Some of my friends call it the boxer flag, but it's really not a flag. For me, it's a coil. Spike for 1 minute. How about this? $3.25 in a minute on only 8,400 shares. So that's why I did not put a trade on this, but I gave guidance on it. That's what I'll do in my room. Sometimes if I don't think it's necessary to trade, but a stock has potential because it's so thin, it may run. LW Lamb Weston. Look at this. All day. From that point at 52 and change to 59 and a half. But it all started with a pop and a coil. Pop and a pennant, whatever you want to call it. See, sometimes it pays to just get out. Don't sit with it for anymore, especially after you've achieved some targets. Lunar. This is a great tech trader swing that we've had a couple times. Here is a beauty. And currently, I'm contemplating putting a swing out tomorrow on this one because notice the run up in May and the pullback in a nice coil. It broke out of the coil and it's right up to that resistance. Next target, 17. And I would say 25. If you're looking for a swing on Lunar that's interactive, intuitive machines, I think they make the Lunar lander. In any case, you can see that as real potential. This morning I came in and looked at CALM. It's an expensive stock, but boy, it gapped and had a rising channel. Very bullish pattern usually pre-market. So I opted to give them a pre-market buy at a 111 with targets at 116 and 120. It eventually made it up to 126, but noted the 1, 2, 3, 4. 4 was a wedge. Even then, I said to everybody, if it breaks this wedge, it may run some more. And it went from about 121 and 3/4 to 126 and a half. A nice little trade if you want to get in and out of it. QBTS. Now, this is one of my favorite quantum stocks, quantum computing stocks. Between that and the nanonuclear stocks like OKLO and SMR, they were my two favorite trading vehicles because it's so popular. But this one was a real winner for us, one of the biggest all year. It literally went long when it broke here at 2 1/4, and it went to 1141 in about 2 weeks, 3 weeks. And then wedged again, and ran up and now flagging and looking like it's breaking out. My target on this one, 31. That's 11 points, folks. keep an eye on this one. What we did today, though, is I came in the morning and I saw this pop coil before the opening. And then when it opened, they went vertical. We went long about 1808. It went to 1949 in minutes. It formed a little falling flag or wedge. It turned around and broke out and ran right up to the high and backed off again. When it finally moved to this triple top, we went long again for a trade at 1965, eventually reaching 2047. You're not going to get rich, but you're going to make some good money day trading that one. AEHR yesterday popped and spent the whole day coiling. So I decided when the coil breaks, if it breaks with volume, and here's what happened. Take a look. Spike. Now, I often will say buy the first pullback. I want to show you something. It popped and pulled back and then sat there for about 3 minutes and then went vertical. We went long there. Moved all the way up to 23 from 21.90, pulled back and coiled, and then drifted lower. But at the end of the day, it was firming up again. That was a little tougher because I usually look for 1, 2, 3, 4, 5. Never got the fifth wave. Instead, our discipline got us out here. See this high and that low? That's where we stopped out at about 22.40. You got to be disciplined, folks, when you're trading. Resolve is a tech trader swing. I want you to see this chart. A big downtrend, V bottom, a mini. If you look back into the chart right there, there's a left shoulder, a head, right shoulder. I call that a mini reversal pattern. There's your breakout. We went long, or I indicated long. No, that's wrong. That's incorrect. I don't usually go long stocks under $2. But when it popped and coiled and broke out here, we went long at about 240. 3 days it was 333. It pulled down for a couple weeks, held support, lateral price support from the breakout point, moving average, etc., and then snapped back from 239 today, surging to 360. That's a new 6-7 month high. It's at resistance though, so keep an eye on RZLV here because if it gets through this area, you may see 4 3/4, 5 quickly. That's a current tech trader swing. GCT started out with a pop and a little wedge and then exploded. And then it settled down, held the VWAP, and kept running. That was a good day trade. Now, one of my favorites, OKLO, went vertical. And I said, don't wait, let's not wait. What I want to do on a stock like that, when I see a big cluster of volume, is wait for the first pullback. Within about 3 minutes, it backed off to 64.5. 7, 8 minutes later, it was 67.45, 3 points. It then backed off to retest, and I said at that point, if it holds the VWAP, it might be a trade. It went right back up to a new high, back to the field, and then it kind of went in a 45-degree angle until it formed a midday wedge here, or coil. See it? Look at the volume of the breakout. That's where I said you can go long for an extension into the $70 range. High, 70.06. That was a perfect nail on that one. And then you can see the rest of the day didn't do much, although let's see something late in the day here. How about that? Dive bomber, right back up again. You got to be disciplined. You see this line I drew? I said, if anyone's still in the stock, you are stopping under 67.75, which saved you. It went down to 63.81 for 4 points. mRNA is a current tech trader swing. I want to show you something. I don't know why, but people in my room hate the stock. What a great move this had. During the COVID era, it went from about 12 to about 400 something. Okay? Obviously, they had a COVID vaccine. 1, 2, 3, 4, 5 waves later down over a period of years, it rock bottomed at around 24 from 400. No, almost 500. I'm wrong. Yeah, 497. Didn't quite get to 500, but look where they dropped it to, about 24. And this stock dropped 95% and then formed a beautiful base in here. See it? The breakout occurred, we put a swing on it. It then popped to first target, pulled back, and has a falling wedge. But it held support, and it spiked right back up again. Today's action showed that when the stock opened here and formed this flag, I said if it breaks out of the flag, we'll go long. It then went from 33.20 to 35.50 for $2.30. A nice little scalp trade, and now it's coiling. This may be ready for more. It's a tech trader swing. I'm looking for this thing to swing to. Survey says it targets 38 and 44. One of my favorite trading stocks this year is Zeta. Look at this move. We nailed the swing from the low teens into the high 30s, and I mean quickly. We would trade it almost every day. It got nailed here hard, and I don't remember what it was, but it dropped precipitously. It literally in 3 days went from 38 to 16. It snapped back up to 28. It came back down again, double bottomed, and rallied right back up to resistance, but then headed lower again. We're not long this stock at all, but today I put on a day trade when it broke out here. It went from 16 and change, only up about 60 cents. So it wasn't a big trade, but it worked. A few more examples. Kodak started with a pop and a wedge. You see the wedge? Let's go back and I'll show it to you. Best way to learn. Look what the stock looked like when we saw it. Wedge breaks out. We'll look at the volume pick up. So at 680, we went long. It spiked to 7. And then spiked again to 715. Not a big trade, but you can see that during midday, after a mini 1, 2, 3, 4, 5 waves up, it went into a consolidation. Let's call it a coil pattern. When that broke out, it reached my target, which was 715. AMDL. Hold on a sec. Yeah. So AMDL started the day, same as we're looking for all the time. This is what I look for every morning. It's not rocket science, folks. First of all, I like this stock. I think it's the next NVIDIA. I really do. But more importantly, key breakout, it came here. This is pre-market. It spiked up and had a falling wedge. It broke out of the wedge. I said it looks like it can extend. Some of us went long. It spiked and pulled back. It spiked again and pulled back. Very choppy day, but look where it got to eventually. From 1020 to about 1070. Not a big deal, but it went up 50 cents. About 4%. Folks, I can go on and show you these charts all day, but the emphasis is that we have at TradeOutLoud learned that the way to do successful day trading, number one, preparation. Nobody prepares better than me and my people. I come in the morning. Are you ready? 3:45 a.m. Pacific time. I'm on the West Coast. I'm on a site for an hour and a half, going through charts, maybe putting on some pre-market trades, creating a focus list of 18 to 25 stocks, the stocks we feel have potential. And that way issue some buy alerts. And then, as I said earlier, come on at 5:15 Eastern. 8:15 Eastern, 5:15 Pacific. And I spend about an hour and 15 minutes before the opening going through continuous updates on how these stocks are acting. I may add a few, I may delete one, I may say this stock broke support, whatever. But the key is preparation, focus. You got to focus on half a dozen stocks, no more than that. I feel like a kid in a candy shop, especially on a day like this, where I had 20, 25 potential ideas, but you got to narrow it down to half a dozen or so really good trades. That's where you make your money. I don't recommend you doing half a dozen. That's what I put out for you guys. And why I do that? Some are low price, some are medium price, some are high price. Now we had stocks today. CALM was a $120 stock. I also had a RZLV was $340. I had stocks in the mid range in the 20s and 30s. MRNA was $34.70. So I want to put out a few ideas for everybody, all different kinds of traders. Some people like low price stocks. Some people only trade the higher price stocks because of liquidity. and then there's some in between. I believe that there's no better place to learn technical analysis as the TechTrader.com because I am a teacher. I rated a 98 teaching ability on a psychological test. So I'm really good at showing people the patterns and how things work. And I answer personal questions in my room every day. You can private message me personally if you're too embarrassed to put it out in the room, or you can put it out for anybody, and you'll usually get answers because people in my room, some of them are very seasoned people with 20, 30, 40 years experience, and have been with me 15, 20 years at least, will take you under your wing and mentor you. If that's what you need, if you're a disciplined, focused trader with a lot of experience, the TechTrader.com is a place to be for ideas. Not only preparation and focus, but discipline. Every trade I put out, I give you targets, stops, and not only that, but during the day when I'm doing my reviews and updates, I'm raising those stops and or raising the targets. Every once in a while, we get a big run and it goes from 4 to 40 or something like that. We milk that trade as much as we can by raising our stops, exiting at points where I believe the stock has been overbought intraday short term. Every stock has spikes, even like this one. Spike, 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 spike. You want to exit when you can. One of my favorite expressions is "sell when you can, not when you have to." Okay, trade what you see, not what you think. Fundamentals are BS. That's my opinion. If you're a long-term investor, different story. But on day trades and swing trades, most of it is momentum, and most of it's technical. Do I look at fundamentals in the morning to find out why a stock's making a move? Of course. Because the bigger the news, the bigger the possibilities or percentage that stock may move that day. So, yeah, I'll look at that move and news pre-market. But you don't hear me mentioning fundamentals. I'm a technical analyst. I've been doing it for more than 50 years. And I am a big believer in price matters, technicals matters, and more important, timing is everything. I know so many good institutional hedge fund managers, really good at picking stocks, terrible at timing. That's what I'm for. There's a good time to buy a bad stock and a bad time to buy a good stock. No question. So if you want to come to a place with expert technical timing and a group of seasoned traders, most of which are extremely personable, helpful, and nice. Over the years, I've called out all the people in my room, no matter how good they were or how much they contributed, if they had attitudes, negative personalities, or continually bashing people. That doesn't occur in my room. It's a safe place to trade and a fun place to trade and make some money. So that's pretty much it for my presentation. I'll take questions from anybody if you have some questions. Be glad to do a quick analysis for you on any of the stocks you may be interested in. David, is there a place like I look at that? You should have your chat question. Okay, there's 8 of them right there. Hang on a sec.
Oh, yeah. Did you find the chat?
Yes, I did.
Okay.
Okay. I have a question here. Can EU or European Union residents still buy the?
That was for the previous presenter.
Oh, okay. Yeah, but you can do that here too. Let's see. Where did we go? We got
just that last one from Jay is the only one.
Okay.
Since you've been starting.
These are all day trades, and I am sure that you will go into it. But how do you identify these? Like I said, let's give you a quick summary. In the morning, I come in. I look for stocks that are surging pre-market. I want something that's 5 to 10 times up in terms of relative volume. In TC 2000 on your screen here, you see it says post buzz. During the day is volume buzz. That means based on historical times over the last 100 days, it will tell you what the percentage of volume is versus the prior average of the last 100 days. So what I look for is percent gainers. I want something that's up at least 5 to 10% and gaining volume in the 500 to 1,000% or more Give me 5,000%. Give me 100,000%. I don't care. If a volume stock is surging with volume pre-market, I'm going to look at it. If it's doing something like this, there's nothing you can do about it. But for most stocks, you get a spike like that, and then you're able to trade it after. So that's what I do. There's a couple questions here I want to answer. Folks, feel free to throw a symbol out. I'll give you my take. OPEN. I traded this yesterday. I told my people to get out. I don't like the way the stock is acting. At all. Now, intraday today, it did have a little bounce late in the day, but check this out, folks. Here's a stock that in 2 weeks went from 50 cents to $5. That's 1,000% in a couple weeks. Anytime you see that, you're bound to get a dramatic pullback, especially when you get volume like that. That is massive reversal downside volume, followed by a little bounce that didn't take, and then the downtrend. Right now, the problem with this stock, 1, 2, 3, 4. I think it may have one more leg down. But if it breaks the declining top line, if this pattern turns out to be bullish, not a bear coil, which it looks like, if it can break to the upside, your resistance is 255 and 3. That's also your scalp targets. Beyond that, you may get a run to 3.5, 3 3/4. But to me, the excitement is gone. And that one bar is all you needed. It only takes one big bar in volume like this to kill a stock. Let me show it to you real quick. Right there. This one bar traded. Is that real? About 10, 11 million shares in a minute on the downside. That's enough for me to get out. So my answer about that one is I would avoid it until I see a price volume spread reversal. FRHC. Freedom Holding. Here's your daily chart. Yeah, that's it. That's a nice one. Well, it's had a long 1, 2, 3, 4. The fifth wave may get it to 195 to 205 range. That's my target. It's going to have to take out 185 first. If I'm trading this stock, which I wouldn't personally, but if just because of my personal preferences, there's my stop under 162, probably maybe 156. You can stop half under each. If it does go, there's my target 205. How wide do I place my stop losses? The question is, these stocks are very volatile, so I assume you need to multiple wide stops. Is that correct? I usually put 2 stops in. I tell everybody you don't need to buy all at once, and you don't need to sell all at once. For example, I just gave you under this bar at 159.82, so under 160, I'm probably stopping it. And then under 156, I'm losing the rest. I'll give it a little leeway in here in case it breaks that bar, runs into the 156.7 range, and bounces. But on a measured move, it moved from 137 to 182, about 45 points. If it pulls back near here, I would look for 45 points. That's about 200, 205. I don't like the volume pattern. And I don't like the overall look is fine, but I just don't like the technicals on this one. And yes, I do. Some of the stocks I gave you are volatile, but you always stop underneath the prior low or underneath the trend line or moving averages or any of those 3 or all 3. If stock breaks those 3, you better be out. SBET. Yeah, this is one crazy stock, folks. One crazy stock. It exploded, gapped, monster, and then literally went in 5 days from 2 3/4 to 124. I kid you not. Crazy stuff. And then fell apart. Reversal bar right there. See it? Made a new high and then reversed and closed. Gapped down the next day, but then bounced. So here's what we see. Once it came down and broke the base and went back up again for about 10 days in a row. But look at this. When you see big volume on the upside, even bigger volume on the downside, I stand aside. I don't like this stock at all. And it's not my cup of tea, but I will tell you this. Drill down at 15 minutes. I'll show you something. This is called a descending coil. It might be bullish, but it's usually bearish. Unless, of course, it reverses, then it's got to do this. For me, if I see SPET make a run past 29, and I know it's only 25 now, but above 29, 3/4, let's say 30. Above 30, it can be 33, 35, 38 or more. But you are risking because of the angle of the tops. A move down to 1920. That's my take. Or if you go long, you better have a stop under 24 and a half. I'm not giving us any leeway down here. If it breaks up, great. If it breaks down, you're risking 5, 6 points. Well, if there are any other questions, I'd be glad to answer anything you have in terms of analysis. Does anybody have a symbol they'd like me to look at? Well, David, it doesn't look like they have any questions. So that concludes my presentation for today. Folks, come join me at thetechtrader.com for a free 10-day trial and enjoy the ride. Most people tell me they make enough in the first 10 days to pay for a 1 or 2 year subscription. So why don't you join me there? Free, no credit card. I look forward to seeing some of you there. Thanks for being here. And David, thanks for inviting me as usual. We'll see you again. Do it again.
All right. Thanks, Harry.
You got it.